probably the headline out of all of today's news, right, Alistair? The idea that the App Store is going to get a revamp in order to woo back some developers that might have been, you know, a little bit unhappy with the experience in the last while.
Yeah, this is all about Apple's services business, and the App Store in the past year has really become the star of that business. Apple, you know, its gadgets are not selling quite as well as they used to. The iPhone's still hot, but actual sales fell last year. And so, what else does Apple have? It has all these services that we consume on iPhones and iPads, and it's really been pushing the App Store as one of the main money generators, and it's a lot more profitable than hardware, generally speaking. And so, what better way to get the services business humming than to give some of these developers a lot more data about what their users are actually doing, whether they're subscribing to new services, cancelling, that type of thing. And the developers have really responded. What
about money, and what about the user experience? Because both are necessary. It's not just about giving app developers data, right?
Yeah, so part of the relaxing of Apple's data sharing with developers is about subscription models. So instead of you downloading an app once, that they're really pushing this idea that you subscribe to either a game or some type of other app service, and they take less of a cut from developers, 15% instead of 30% for those things. But that gets more recurring revenue, and it's good for the developers. It's also good for Apple. It's good for its valuation in the stock market.
And that's what's important, isn't it, Alistair? Recurring revenue. It's interesting as the shares hit a record high yesterday, the difference in valuation, Apple versus Alphabet versus Amazon. I mean, it's 15 times. The others are on much higher multiples. Does that mean it needs to close the gap on recurring revenue to get close to those other tech titans when it comes to valuations?
Yeah, that's right. I mean, it's quite a shocking difference, especially compared to Amazon. Yeah, so I mean, even though it's taking a 15% cut from developers instead of a 30% cut, you know, if you subscribe to a lot of app services through your iPhone, that's going to be revenue coming in, you know, in future years, and investors love that type of thing, and that they'll give it a much higher valuation than, say, you know, especially when you're talking about the new iPhone, the new iPad that's come out today. You know, people are only going to buy one of those once every 3 years, maybe.
And is it going to boost sales, this cheap iPad, the cheapest ever, and this lovely red shiny iPhone?
The iPad is a great example, actually. So it's a lot cheaper, which shows that, you know, the demand for the actual device is lower. But if you have one of those iPads, you're locked into Apple's operating system. You're more likely to do one of these new app subscriptions, which feeds into the services business again.